Daily Cycles here with a quick update on Friday, April the 25th. So, what a nice week. The S&P has pretty much followed my rough scenario here. Of course, on Monday we did drop a bit deeper than expected. That was partially an effect of Friday, the Easter Friday being closed. So there was some downside missing and we had to catch up with that. Anyway, we see here on from Monday on, my green cycle here is bearish, and we should see some kind of weakness next week. But there are a couple of different scenarios here. So this black one is my main scenario, and well, just having a look at some different stuff here. Let's switch to the hourly data. Dow Jones Industrial. So I have my 2-week oscillation here in yellow, and yeah, we had a nice upswing this week. So next week we could have some kind of a downswing. We could start an ABC corrective move, but you know, we could also maybe see something like this. Well, it looks kind of bullish. It looks like a big double low, and we are starting to break out. So, you know, that alone, it looks like we have made a major low here. We should rally. We should take off. But yeah, I'll come back to that. Anyway, yeah, that's the rough scenario going forward. This next week has a bearish bias, then we have an up week and then a down week, and I think around from mid-May on, then the cycles turn more bullish. But until mid-May, there are bearish things that could happen, because you know, I had this scenario, this first move in the bear market, it has this green average. And currently we are at this point where, you know, this final green wave turns down into a low around mid-May. So yeah, looking at some analogs, we have like 2011 and 1998 here are very similar, and they turn down around next week into a big double low. So, but you know, 2011 and 1998 were very bullish. You know, this was all the bearishness we got, and then we started a new bull market. So could that happen? Well, you know, I have this is my main scenario, and I think it's very unlikely that we just start a new bull market here from May. I think the best case scenario would be some kind of call it a soft landing with a low in the fall, and then we could rally from that point on. But I suspect we will break down further and also see a bear market first half of next year. So what could happen? Well, this is a war cycle, a 56-year war cycle, and I just had a look at where do wars typically begin through the 3.5-year cycle, because all these cycles are connected: the 3.5-year, the 7-year, the 28-year, 56-year. So actually here in blue you see where do wars typically start, and we are at this point. And you see we are going into a period where we have seen many wars have started. Like going back here, we see Ukraine was, you know, an analog to August this year. So something could happen this summer. Also we see, well, you have kind of this double top, all of this all the way into next summer, where the 3.5-year cycle is bearish for the stock market. We often see wars beginning in this period. And then we have another top. So there are kind of two peaks in the 3.5 year cycle. And at this second peak, going back, we see that was just about where the Israeli unrest, Palestine, started, October 2023. So, wars are definitely a problem. Could be this year or this summer. Also looking at the 3.5 year cycle, this is, here I have plotted where does the bull market top out and how deep does the bear market go. And currently, our current bull market topped around this point, and we see this is kind of the place where the worst bear markets have begun. But also we see there's a couple of bear markets that really were not that bad. We see we had some bear markets starting very early in the cycle. Normally we top out a little bit later than we have just topped out this winter, and we can also have very late tops. And here's the variation. Here I've gone back to 1948, so we see we had some very late tops and then some very early tops in the 1960s and then kind of late tops in the 1980s. And yeah, this is where we are now. So definitely this is kind of an early top we made in February, early in the 3.5 year cycle, and that definitely opens the possibility for a deep bear market. But no guarantee. Could also be just what we have seen until now, about 20%, the soft landing. So I think that was all for today. So yeah, does look like a big bottom formation. Then we are starting to break out, and yeah, when I'm just looking at this, it makes me kind of bullish. But on the other hand, the historical analogs, they tell me that don't get bullish too early. When you have this deep capitulation and the beginning of a possible bear market, we do not rally up to new highs from here. At least we need to make some more bottom formation into mid-May. So I think that's for today, and see you later this weekend in my normal video. Bye bye.